What's the timeline? How much time they have to collect? Okay? We talked about that. And we, analyze input and we make a recommendation. So, and then we have an action plan. So this is what happens when we make a phone call. So when we call the IRS, we want to know what year you owe, what balance, what this means, this FFR, that means who prepared, did the IRS prepare the return? It stands for substitute for return. That's just their language. It sounds awkward. Substitute for return, that's what that means. That means that they filed a return for you. And the expiration is when is it over? Okay? So the first year we have is 2003. This person owes $35,000. The IRS prepared the return. When does it expire? Should we file that return? No, because it's getting ready to expire. Now, accountant rookie, would say, okay, I could save you $10,000 if I file that return. Let me file that return. Now you owe $25,000. But guess what? They have 10 years to collect the $25,000 if you file a return. So you let this expire, okay? So you have a nice Christmas present, right? Second year, 2005, same story. $38,000. Should you file? No, it's going to expire. But the IRS prepared that return. Okay? Third year, 2006. You owe $11,000. It says no, so you prepared it. That's when it expires. Okay?
So those two that the IRS did, do you have to pay taxes on them?
Oh yeah.
Okay.
Yeah.
Until it expires.
Yes. This in other words, this is a case. This is a case. When we call, we get all this information, and then we analyze like this, and then we go into action. Okay. All right. So yes, that third year, this person filed a return. They owe $11,000, and that's when it expires. 2008, same thing. He filed. That's when it expires. 2009. Okay. 10. Okay, that was okay. Now here's the thing. This is $21,000. That's how much all this adds up to be. Okay? So let's do it.
03 to 2010?
Yes, if my math is right. 03 to 2010, that's 21 grand. So this person owes the IRS $21,000. So I call up, I get an update. 120, I'm sorry, I meant to say 100, I'm sorry, 121, pardon me. 120, you gotta edit that out. 121, right? Now, let's say this person has $6,000 monthly income and they have $5,900 in expenses. The difference is $100, right? And let's say they don't have any assets, none. We can settle, remember I said you can settle times 12? Remember I said that? Mm-hmm. So this person could settle this bill for $1,200. Now, let's think about this for a minute. I wouldn't file the orphan compromise yet. I wouldn't do it. The reason I wouldn't do it is because those two numbers, what's that, 73,000? I think, yeah. The 73,000 falls off in 3 months? What I would do is file an orphan compromise after that falls off. Why? Because when you submit an orphan compromise, what do we do to the collection clock?
You restart it.
We give it more time. We stop it. So while the orphan compromise is in the system, we're going to add a year to that 12, 15. It's going to be 12, 15, 18 or more. Something could go wrong. Your paperwork could be shoddy. So what we do, we wait, let that fall off, then do the orphan compromise. Okay? And we settle, then we settle. Does that make sense? So what we would do is that, okay? Now here's something the IRS doesn't tell you when you do an orphan compromise. It's nowhere in the instructions. I looked. It's nowhere in the instructions. If you can pay them off with an agreement, they won't accept your offer. Let me explain what I mean by that. Let's say that this difference is $1,000 a month. Okay? And let's change this number to 119 to make this work. Let's say that's 119,000. You can pay them $1,000 a month. So we're changing this number to 5,000, right? Y'all follow me? And now your difference is $1,000 a month. That's how much you can pay them, $1,000. They're gonna, if you took the $1,000 times 12. Remember we do it for times 12? And it comes out to 12,000. So on the surface, it appears that you qualify for an offering compromise. This is how tricky they are. All right. So because the difference between your income and expenses is 1,000, you multiply by 12, that's 12,000. 12,000 is less than 119,000. You're good. That's not so fast. What they say, if you can pay us off with an agreement and we get all our money, we're not doing an offering compromise for you. All right. So you take $1,000 times 120. Why 120? Because they say it's 10 years on the statute. That's 120 grand. So they say, we can get you in an agreement. We're not going to compromise. But it's not in the instructions. So you have to know what you're doing when you do this. Okay? So a small expense of $500 here changes your dynamics seriously. You're golden. We've had many cases like this. Okay? So it's, yes, sir.
Assume for business owner, your income, in the moment you are making the agreement,
Yes.
your income is like a 10,000.
Yes.
6 months, you already make agreement.
Yes.
6 months or 9 months later, your income comes 12,000.
3,000?
12,000.
12,000.
Up 2,000
Go up.
Okay.
How you change the figure?
Okay. So you're in your agreement already.
Yeah.
Okay. I would keep paying what you're paying. Okay. You don't have to report to them that say you made 12 more, so I want you to take $2,000 more.
At the end of the year, they will know on my tax return.
Yeah, but they won't change your agreement. They don't change your agreement. When the agreement is set, now they can come back, but normally when you're in an agreement, it's done. Because in a business, what happens? Isn't it up and down? Mm-hmm. Right? So it may be up now, it may be down later. So they kind of leave it alone. But the reverse, what I thought you were going to say, is that if your income went down, then I would go back now. I would go back and say, hey, why? Because I can't pay it. Not that you're trying to, I can't pay it. And what's going to happen if you can't pay it? They're going to keep coming at liens. It's going to prevent you from getting another contract. So let's talk about, let's talk about the trust fund penalty, because a lot of business people are here. You guys are familiar with what that is, the trust fund recovery? We all have employees, right? We have employees, and you're supposed to take taxes from, so let's say a person has a salary of $1,000 a week, and the taxes are $300, and the net is $700. That's the net check. Okay? So your employees, each of them get $700, and you withheld $300. This money is supposed to be sent to IRS along with the matching tax associated with this. Okay? All right? So if you don't, this money that you withheld is entrusted to you. They call this is trust fund money. These are some real poor,
markers.
yeah, markers. Try this. It's trust fund money. Because you as an employer are supposed to take this money and send it to the IRS. If you fail to do that, the IRS can pierce the corporate veil and come after you personally. Okay? Your company is responsible for this and the matching. The matching on this is what, about, let's call it 770? Yeah, something like that. Okay? So this is the money that you took from your employees that you supposed to deliver to the IRS. You put it in your pocket and did something else. They also can put you in jail for that. So payroll taxes are very serious. You don't want to mess around with that. It's the worst tax to owe. It's different than income tax. Because think about it, this is how the government runs its business. The government gets money because all the businesses take money from people and pay payroll taxes. So when you disrupt that, they really frown on you. So you want to be careful. Yes, sir.
Yeah, question. This figure, I have a question on it. You do the payroll.
Yes.
You don't report to IRS yet because sometimes the payroll, if they give you a number, some payroll you must pay every month. Sometimes they tell you have to report in the end of the year. Now, you are working for government or you are working somewhere.
Yes.
They hold you money. They don't pay you yet the money, but IRS come after you. How you go to figure this? Because IRS, 3 years ago, I do some job in Laguardia.
Okay.
For one reason, the main contractor have problem. They freeze the job.
Yes.
I'm subcontractor. They hold me 600,000 now.
Okay.
I hold IRS 56,000, but IRS come after me personally. I say, hey, I don't get my money yet.
Okay.
Help me get the money from this guy. I
Okay.
pay you.
I see. So in other words, you paid your employee, but didn't get your receivable from your
Yeah, from the
unit.
contract.
See, that's a tight spot, okay? Because here's the deal. You may be able to get some penalty abated because you had a receivable problem. But when you write that check to the employee, you on the hook.
Now you tell me, you want me to pay 20,000 a trust fund before we talk. I say, I have nothing to pay you.
We have to
I get my money, I don't pay
think. We can help you. But the key is that when, to answer your question, when you write the check, you on the hook for this. Even though you didn't get money from your contractor.
That's the bad part.
It is. And that's why business owners are in a tight spot.
That's the bad part because I pay my employee, I make the tax, I make the payroll. Okay, I think, okay, I collect 20,000 in next month, I can pay IRS. So I never collect that money. In the same time, IRS one get money, and the other hand, I don't collect my money, and no bank give me the loan. So where they want me to commit suicide? No.
We have a lot of people in that situation. It's a tough spot. You're looking at maybe having some penalty abated. But then if you tell them where your receivables are, guess what they're going to do? They're going to go get it.
Yeah, they have.
Yeah, so when you start saying, I have all these receivables over there because I'm not, they're going to say, oh, really? Then they're going to go over there and get it. So it's a balancing act.
Question, do you have to tell all the truth to IRS?
Do you have to tell the truth?
Truth to IRS? They can't even pay the money. They want me to tell them who I'm working to if not. So they go to the guy and say, oh, this guy working for you. I want security.
I answered this way. We have to have an intelligent relationship with the IRS. Okay, so what we're running, we're close to 8, right? So we've had some questions, but we're opened up for more. The point is that we have been doing this for quite a while, over 25 years. And I've had a lot of talk shows. I've been on radio. We wrote books about it. We know how to navigate through this IRS process. The clients that are successful with us are the ones that do 2 things. They pay their bill, and they give us what we ask for when we need it. Okay? Because a lot of times, I've had many cases, unfortunately, of people come in, they say, you sound great, they'll sign a retainer, they sign it, and you don't hear from them again. What happened? I can't solve your problem if you're not engaged. So I would need your paperwork. So when you participate, we can get the problem solved. We ask that you don't speak with the IRS because we don't want to have 2 chefs in the kitchen. The IRS will find a wedge between us. They're tricky. They'll say things. So we want to make, and plus we don't want you to say something that's going to hurt yourself. Our hardest case is when someone was working with the IRS already, and we have to come behind, like the gentleman that just with this levy I was telling you about. Okay, because they have it's a lot of friction. So the point is that we are available to help you. There's no obligation tonight, but if you're interested, you speak with Rashida. We can set up an appointment in the office. If you're interested tonight, we need something. We want to start something tomorrow. You can hire us tonight. We'll start tomorrow. All right. So I just want to say that before we open up for questions. I appreciate how engaged you guys are, and it's intense. We know it's intense, and we're here to serve you. The IRS is intimidating, but we live in a land of laws, and the IRS follows the rules. The key is to be organized, keep your word, and follow up. So the workshop tonight, we generally have workshops once a month, and we share our secrets. We give you the secret sauce, and you can hire us or you can do it on your own, but we tell you what we do, how we do it, and hopefully the participants tonight will benefit.